Hi there. There are a spate of NFOs coming out, and I thought, why not I review some of them? You might have seen my earlier reviews on Motilal Oswal and Nippon, and I do hope that you found them to be useful. In this video, I'm going to be reviewing the Axis Global Equity Alpha Fund of Fund NFO. So first and foremost, what is this fund? Well, it's a feeder fund, which means that it's investing the money into another international fund. The fund is the Schroders International Selection Fund Global Equity Alpha Fund. Now, Schroders is a very old group. It's about like a 200-year-old group with about $500 billion of assets under management. Let's understand first what is a feeder fund and what are the pros and cons of this fund. So in this fund, the entire money is going to be invested in this international fund, that is the Schroders fund. What are the advantages of an international fund? Well, first and foremost, diversification is a huge advantage. As of now, most people have their entire investments in India only, and they might be looking at investing into international markets because international markets do not have a high correlation with India. What this means is that if those markets go high, then the probability of Indian markets going high for the same reasons is pretty low. So low correlation, diversification from Indian markets are reasons to basically look at investing into international funds. However, there are some drawbacks. First and foremost, many people are not able to understand those overseas markets. And here I normally see that there is so much of focus on the US markets, and maybe to an extent people understand US markets, but I'm not sure how, as investors, whether we follow or we understand what's happening in markets like, let's say, Brazil or Hong Kong or China, right? Of course, there is the currency risk because you're investing in overseas currency, which means that you are at a currency risk. And remember, these great returns that you're seeing over the last 1 year on international funds, well, firstly, markets, the US markets that is have done well, but rupee has also depreciated. Now, let's say you have the opposite happening, which is rupee is appreciating, then this is going to negatively impact your investment. Finally, depending upon the allocation, it may or really may not impact your overall portfolio. Certainly, a small allocation is not going to have any significant impact, and a larger one is really not advisable given the fact that you might be quite unfamiliar with the geopolitical and forex risks that are present in this particular product. So, should you invest? I'm seeing that there's this huge interest in international funds over the last couple of months, and I really think that it is driven by what people are seeing in terms of the near-term performance on these funds. A lot of the near-term performance is actually driven by the performance of the US markets. Now, when we look at the US markets, yes, the last decade has been great, but people tend to forget the last decade that was from 2000 to 2009, where the US markets actually gave negative returns. Actually, I had also invested in one of these feeder funds and I chose European markets. And let me tell you, honestly, I never made money in that fund at all and finally exited. Thankfully, I had invested like a smaller amount, so it did not really make a difference. But I think if you are deciding to invest into international funds, you need to be very clear about why are you investing in these funds. It cannot be because, this is a good investment at this point of time or like international markets are doing well. That cannot be the reason to choose international funds. Where does this fit in with your financial goals? Do you have your basics in place? Many times I find that investors don't even have multi-cap or mid-cap funds in the right proportion, and then they're going all out trying to buy, let's say, gold or trying to buy these international funds just because these are flavor of the season. So the first thing is that you need to figure out are my basics or is my core allocation towards my financial goals in place? And number two, what is the reason that I want to choose the international fund? Where does it fit in my portfolio? Point number three to remember is also that these funds follow debt taxation and certainly not equity taxation. Point number four, as far as the costs are concerned, well, I see a varying range of costs between zero point 0.4 to 2.25%, which is what the expected expense ratio in this particular fund of Axis is likely to be. My take is that these funds are good as tactical allocation, which means that you have your core allocation towards your financial goals in multi-cap and mid-cap funds. And then, because you want to take a concentrated exposure to international markets, that is why you would actually choose an international fund. So it's good as a tactical allocation as long as you can look at your entry and exit points. Remember, at this point, you're certainly entering in at a high. As such, I would still prefer to go with funds in India which have already exposure to international stocks rather than buying an international fund. But for those who want to take a more concentrated exposure, you can choose international funds. Just ensure that you limit it to 10% of the portfolio. Of course, you need to be clear that somewhere these have to align with one of your financial goals. So to sum up, I would still stick with Indian funds. But if you do want to take a concentrated exposure, keeping in mind the currency fluctuation, the debt taxation, you may look at these funds. Make sure you click on the bell icon to subscribe. I'm going to be coming out with various other reviews on other funds as well. So do watch out for our videos. Till then, bye-bye.